Hi, thanks for joining me, Andrew Overman of Location. Each week, myself and good friend Michael Webb of Mortgage Republic join together to step through the mortgage minefield and answer your viewers' questions. And this week, we've got another great question, Michael. What costs are involved in getting a mortgage, please? What costs are involved in getting a mortgage?
Yeah, that's a fantastic question. So there's some very kind of standard costs. So obviously, if you're buying a house, there's going to be legal, solicitor costs, things like that. We'll just assume that. So I won't run through those. If we look specifically at the mortgage, you may well have a mortgage broker fee. So that is the fee for the mortgage company working or the mortgage brokerage working for yourself. Obviously, mortgage brokers will also get what's called a procuration fee from the lender. This won't be added to your account or your mortgage. It comes out of their marketing overhead, so it's not a fee that you will pay, but it is something that will be disclosed to you as what is being paid. It's a very open and transparent thing. And most brokers nowadays are funding their business via a broker fee and the procuration fee and any related commissions from add-on insurances that are relevant and applicable to you. The other fees involved is there may or may not be a survey or valuation fee. A lot of products for basic mortgage valuation now are coming with a free valuation, but that could range anywhere from £100 up to say £500. And then if you're having a more advanced survey, that can go upwards to maybe £1,000 upwards, depending on the price of the property. Most building surveys, so full structural building survey will be quoted on a bespoke basis, property by property. But something like a home buyer survey, you would be looking at maybe anywhere between £300 and £600 as a rough kind of cost. You may have an upfront application fee to the lender. So they may charge £100, couple of £100 upfront as an assessment fee of your application. These are less likely on residential mortgages, more likely on kind of commercial buy-to-let mortgages. And then you may have a product fee, and these are structured either as a set amount, say £495, £995, £1,995, that's £1,995, and or a percentage, so 0.5%, 1%, 2% of your borrowing. And these typically can be paid up front or can be capitalized onto the loan. If you're capitalizing it onto the loan, you need to understand that the fee is costing you even more because you will pay interest on that fee as well. So, but there are benefits to putting it onto the loan as well for cash flow up front. So most people, in fairness, will add it to their mortgage. Now, I've mentioned lots and lots of fees there, and that doesn't mean that every mortgage will have every fee. Some will have a blend of them, and some will have none of them at all. So obviously, one of the things you need to discuss with your broker is your attitude to fees. Now, one of the key things to understand is the reality of the world we live in. Nothing is free. So if there isn't a fee, there is likely an offset in a higher interest rate. Okay, so let's say you've got one mortgage at 1.5% fixed for 2 years, but it's got £1,000 fee. What you may find is a 1.75%, but with no fee. Just to give that, they're not actual products, just to give you an example. And then what your mortgage broker should be doing is working out whether it's better to go for the 1.5 with £1,000 fee against the 1.75 with no fee. Now, in very basic terms, and I'm going to keep this massively like a big variance, at £50,000, I can pretty much guarantee you'd be better off going for the 1.75 with no fee. At £500,000 in comparison, that the 0.25 difference would save you that £1,000 in interest over the period of time, and somewhere in the middle will be the tipping point. So, but a good mortgage broker should be doing that calculation. Now, I'd love to say we sit there with a calculator and do it for you. We have software that works that out and helps us establish which deal would be best for you. So yeah, we're not like maths nerds. We do have software that does that job for us. So they should be establishing it. However, just make sure you're asking those questions and assessing the market. And if you're going into a conversation with a mortgage broker saying, look, I don't want any fees, just open up the conversation a little bit more if they don't, around, well, hang on, let's just check, is there a deal that's got a fee that would be vastly cheaper for you to consider? Because too many times people come, no, I don't want a fee, I don't want a fee. And if they're too hard-nosed about it, they may miss out on a deal with, say, a £495 fee that has a massive saving on interest rate that would be better for them to look at. So just open up that conversation. A good mortgage broker should be doing that. But as we know, in any profession, there is a scale of what would be classed as a good professional. So my advice is, if that conversation isn't engaged with you, try and open it up yourself. Or if you're feeling like that conversation isn't being engaged with properly, then speak to a few mortgage brokers and see the difference in the quality of the conversation that's held and the advice that you get, because you will see a vast difference in it.
Always great advice. Michael, thanks for joining me again this week. If people wanted to get in touch with yourself and your team there to seek your advice on the matter, how would they go about it?
Yeah, so probably best via our website, mortgagerepublic.co.uk. Got contact forms on there. Get in touch. We'll give you a call back and arrange a time for a kind of in-depth discussion of your situation. And obviously, we're doing these videos all the time, Andrew. So if you're wanting to just get the information via this medium, make sure you subscribe to the channel, and leave us your thoughts down below of what we could do. Any questions you've got, we'd be happy to answer in future videos. Comment down below for us.
Brilliant. As always, thanks for joining me.
Thank you, Andrew.